Bitcoin Shakeout, ignore the FUD and find the opportunities. Hey guys, bear with me a second. I got like multiple things playing here. Let me figure this out. Oh my goodness. Price absolutely like getting annihilated right now. People freaking out. There's a lot of FUD. Don't let it get to you. I'm going to explain here shortly. As soon as I find where this other tab is that's playing and making me nuts. Oh my God. Let's start by turning that off and maybe that will help. Oh my gosh, guys. Hope you're having a decent day. I know it's kind of hard with all of the insanity with the price action here. I'm hearing myself twice, so I might have to start and stop this over again if I can't find this tab. Like, seriously, this is getting a little nuts. Got it. All right, there we go. Sorry about that. I appreciate your patience bearing with me. Welcome to Bit Break, and I promise they're not all a messy start like this, but glad to have you with me. My name's Keith Allen, and today we're going to talk about what's going on here. This Bitcoin shakeout. Lots. Every time we get a retracement of any way, shape, or form, it seems like it's the same story. Panic floods social media, FUD about the health of the trend, all of that noise. Let's just go ahead and clear the air. Number one, and I say this frequently, up only is not a thing. Straight lines are not sustainable, and healthy markets ebb and flow like the tide. So, yes, that's happening right now. And yes, the market is overdue for a deep correction. And when I say deep correction, I'm talking 20 to 50%. And that could be developing now, but I'm not convinced that it is. But more importantly, the FUD about the cycle top being in or the bull market being over, in my opinion, is unwarranted. And here's the reality: this is a shakeout, plain and simple. The market is testing your conviction, and we're going to look at the charts and show you the things that I'm looking at that give me confidence and conviction that the cycle top is not in, and that the bull market is still healthy. The macro trend is intact. But this volatility, is really the price of opportunity in this game, right? This is intra-cycle. What do you want to call it? Intra-day, intra-week, intra-month, intra-cycle volatility. That's really what the crypto market has thrived on since day one. And yes, it's scary to watch your portfolio value fluctuate in wild swings. And that's the reason that crypto isn't for everybody. But with that volatility also comes opportunity in both directions. So this isn't a time to panic. It's a time to practice patience, practice discipline, and to look for opportunities. So in today's analysis, we're going to look at the key levels to watch. I've given this to you a couple of times this week already. Everything I pointed out to you Monday, the levels to watch that might indicate a breakdown like we're seeing now, have remained valid. And we did the same thing, had a similar discussion yesterday in Blockchain Banter on that live stream. And so I'm going to show you that. I'm going to also show you the levels, the areas, the things that you might want to be keyed into that would indicate that, hey, this thing is breaking down. I don't think we're there yet, but I want to show you the levels that I look at to indicate that, to arm you with the knowledge to make your decisions and make database decisions rather than panicky and emotional ones. And that also speaks to the discipline, patience and discipline piece of this. And those to me are the number one, the keys to being successful, long-term successful as a trader. And they're also some of the hardest things to learn. It's easy to say I'm patient and I'm disciplined, but it's another thing to actually do it. And so I'm going to show you some of and it's something that I continue to work on, by the way. And if you're a trader and if you're trading for any length of time, this journey is a continuing education and a continual process of of reflection and analysis of your prior trades, and always figuring out how to do it better, and to, of course, assess the market. So we're going to look at all that stuff. Live chat is open if you want to join me. I always enjoy engaging with you guys. Keep the insights coming, keep the questions coming, and we'll do our best to address them as we move through this. First thing I want to do, though, is take a look at fire charts, because really just in the time that the last couple of minutes, we've seen some major changes in the order book that are rather interesting, in my opinion. So I'm going to start here just to clue you into this, and then we'll get into the candle charts, and we'll look at all the structural stuff and the technical stuff that I alluded to. So for starters, and this showing you this probably is not going to do a whole lot for your confidence at the moment, but I'm going to show it to you anyway. There it is. There's fire charts. You can see major rug pull here, an entire ladder of bid liquidity that was, in my opinion, what was holding us up above that prior level of support at 91.6. We have a brief bounce here, but let's see if price can clear this 93.8, basically get back to 94K. If it can, it's smooth sailing to get back up here at least to 96, at least for the moment. But this is brand new. This has happened in the last few minutes. So we'll come back to this and keep an eye on things. Let's go to the charts, which I think paint a clearer picture. I had told you previously that this green 21-day moving average was a level to watch, and if that we broke that we were likely coming in for a retest here in this 91.5 range, 91.6-ish. And this level has been very important. It's held as support. It's been through multiple retests. This is really our last validated RS flip. There was an attempt to RS flip 100K the other day that obviously invalidated. We've got a couple of back-to-back trend precognition signals that speak to that, or at least indicated that. Even some confluence with another trend precognition algo down here. So this is not a surprise, nor should it be, right? We teetered above this for a while, and finally things broke down. Last night, it was trying to hang, it was fighting for it, and we saw some economic data come out this morning, a bit mixed, I might add, and that's another piece of this equation here, right? Yesterday we had some data, JOLTS data yesterday, I believe, and today ADP data came out, and this was not good, right? This was an indication that far fewer jobs than forecasted. 140,000 were forecasted, 122K were the actual reality, according to ADP. But this is a bit confusing, because initial jobless claims came in cooler than forecasted. That's not so surprising, considering the fact that we have, we're coming off the holidays, and typically there's a lot of hiring leading up to the holidays, October, November, through January. We often see some boosts in employment. Continuing jobless claims, a little bit contradictory of that, right? We had a cooler than expected initial number. We had a warmer than expected continuing number, and but the 4-week average is down. So a bit of a mixed bag here. I think personally, we have FOMC minutes coming out here this afternoon. I'm not sure that really reveals a whole lot to us. I think this just kind of fuels some of the intraday volatility, or intra-week volatility, if you will. I think the real number is going to be on Friday, when we see non-farm payrolls and unemployment rate come out. Those are numbers that are likely to move the market. Now, it could be confusing again, because we would want to see a flat or a cooler unemployment number. At least most of us would want to see that in terms of strength of the economy. Fed watchers might be saying, well, what would that mean for rate cuts? At the moment, there's not a rate cut expected in January, so that may or may not have influence. A hot number might get people stirring that maybe the Fed would cut. the incoming administration would probably like to see a hot number come in so they can tell you that they improved it, if they do indeed improve it over the next 4 years. But this is, altogether not a horrible number in terms of unemployment. So flat or cooler would be welcomed, in my opinion. Um, if the market reacts to a hot number with a positively thinking that that's going to give them a rate cut, then in my opinion, priorities are not well aligned. At the end of the day, we got to have a strong economy, right? And we need people working. So that's that piece. As I mentioned, live chat is open, and Wakas, good to have you back, sir. I'm glad this has been helping you out, and I appreciate the ongoing support, my man. Thank you so much for following along. And I couldn't agree more, right? So let's go back to the charts here, right? So you're seeing a little bit of a bounce here, of course, because I moved some stop losses up to protect some profits. But we'll get into the discipline aspect of this in a bit. But this has been a longstanding support, as I said here, 91.6. We RS flipped it back in before Thanksgiving, right? So mid-November, and tested it once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times. And here coming in for a 9th retest. And at the moment, and I use that term lightly, at the moment, it's holding. Now, in terms of deep corrections, we talked about the deeper correction, right? And I do think that Bitcoin is primed for a 20 to 50% correction. Those aren't arbitrary numbers. Those are numbers that we have seen time and time again over history. And so this is, historically is why I expect that we would see that again at some point in time. Doesn't mean it has to come from here, right? We talked about this yesterday on a blockchain banner. It does not mean it has to come from this current all-time high. It could come from much higher. And I do believe that we will go higher. And the reason that I believe that we will go higher, there are a couple of reasons I believe that we will go higher. One is that we are very early in this cycle, right? Here's each of the halvings: first halving, second halving, third halving, fourth halving, and here's the next one way out in 2028. Look at how early we are in this cycle versus how far prices moved in prior cycles. I have no reason to think there are aspects of the market that are indeed different, like we now have ETFs and institutional demand. We now have an incoming crypto-friendly administration. Those things are positive, right? Those are fundamentally positive for Bitcoin and the broader crypto market, but especially for Bitcoin. So what would make you think that the top is in? Certainly nothing that you see on this chart. On top of that, we have on the weekly anyways, on the weekly time frame, all of the moving averages are unwound. Green is 21, red is 50, blue is 100, purple is 200. They're all unwound. The macro trend all the way back to the FTX crash remains very healthy and intact. And that, that would accommodate, we talk about that deep correction. That deep correction would accommodate a move really down to that trend line, which is nearly 50%. Now that's a move that nobody wants to make. And we could argue, or at least create some merit for maybe an adjustment on that trend. If we go back to September of 23, where we had that last consolidation around 25K and this whole move started, and that would adjust us up here, well aligned. And I'm just drawing this, rough, well aligned with the 50-week moving average. And that would put us at, have confluence with the 2021 top at 69K. And I think that really is the level that nobody wants to see us lose at this stage. So as long as we are above this, I'm not concerned. if we lose this, then I start to wonder if this would hold. Um, at that point, we would likely start to see these weekly moving averages start to cross, and that is obviously often an indication. But depending on how patient you are, you could take it all the way through the 21 crossing down here to the 200. But there would be a lot of price depreciation between now and then for that to happen, and you probably don't want to give everything back that you've earned here over the past year. So those are the levels that I'm watching the closest in terms of my concern of when things would break down. And a black swan could take us here, right? Black swan could take us to any of these levels. So it's what happens after, right? What kind of recovery do we have? So I mentioned that we have an unemployment number coming out on Friday. I think I did. We have this unemployment number coming out on Friday, and that's likely going to be a catalyst for a move as well. So we'll watch that. And then the next really big calendar event is going to be Inauguration Day on January 20th, right? That's when Trump takes office. His administration takes office. He had a super long list of things he wanted to do on day one. And, I'm not sure how much he can actually accomplish on day one, especially of those things. Like he's not going to be able to buy Greenland or Canada on day one. He may be able to push some legislation on day one. He'll be able to have some pardons on day one. He'll be able to maybe ask for some legislation on crypto regulation. He may be able to declare that he wants to have a Bitcoin reserve. But how he executes that Bitcoin reserve remains to be seen, right? Cynthia Lummis, the senator who proposed the bill on crypto, wants the government to buy basically sell gold to buy Bitcoin. And I think Trump's initial plan was just to hold on to the seized Bitcoin and continue to seize more Bitcoin. So I would say hold on to your Bitcoin and maybe custody it yourself. So there's that. In terms of where we are locally, this range has held for a while, but it doesn't have to hold, right? It doesn't have to hold forever, and it may not, right? If we're going to get that deeper correction, we've got to go deeper than this. So in terms of what a 20 to 50% move looks like, in terms of that correction, if we went down to this 86K level, which is the bottom of this channel where we did have some brief consolidation. And if you remember, when we were pumping out of the election on November 5th, it was like straight line candle after straight line candle, green candle after green candle. Where's the consolidation? Where, at the time that price finally retraces, whether it is a correction in this market or in a future bear market, where's price going to land? There's got to be something structural for that to happen. And there's only two places it's really happened since the breakout above the 2021 top, right? We have a brief period of less than a week above this 86.5 level. And we had a few days at this about 76K level. Interestingly, between here and here lies the 100-day moving average, also a potential target. Lies the CME gap, which is around 78K. That's about a 28% move. And then, we have this consolidation here, and I'm just speculating that if we do go for that gap fill, which let's see exactly where that is. If we do go for that gap fill, which is down at 77,900, okay, so we'll call it 78K, then getting to that extra, so what did we say, 78K? So getting down to this level is not a big move, right? And that's a 30% move. And I think any of those moves, any of these would satisfy technicians who are looking for that deeper correction. And nothing says that we only get one correction during this cycle. It's common to get multiple corrections during these bull runs. So So don't panic when that happens. Be prepared for when that happens. And also be looking for opportunities for when that happens. Because when we get these dips, when we get these shakeouts, those create opportunities. And so if you can go in advance and you identify the levels as we just did, you know that, gosh, if price goes here, there is a chance that we bounce. I'm not saying that you should catch knives here. I'm saying that this is an opportunity that potentially you could be eyeballing and then look for buying to resume. Right. So here's a situation where we're seeing liquidity shifting quickly in the order book. We're just seeing a little bit of buying, not a lot of volume here just yet. See what happens. See if price can clear this, or if we're just kind of creating an opportunity for some volatility around this economic data that I mentioned. Right, we've got FOMC minutes coming out here in about an hour, and then, like I said, Friday we have that unemployment data. So don't believe for a minute that we can't round trip this again, right? We could run it right back up. And then if we have a bad unemployment report, we could run it right back down. So just know that nothing is really off the table in the world of crypto in terms of volatility. But if you can identify these levels, as we just have, and you can see where the support is, then it becomes easier to build some conviction and confidence around the levels that you want to be a buyer or a seller. And so now I want to speak a little bit to the discipline piece, and this is something that even I still work on. I do a lot, right? I try to trade as much as I can, spend as much time of the day as I can trading. But let's face it, I'm running a couple businesses. I'm a work from home dad, and so it's a balancing act. I don't get to spend as much time in charts and day trading as I'd like to, or as I used to. And so often I will place my bids, and sometimes you have to adjust those bids along the way, but I typically will place my bids, and then I will wait to place my my take profit orders and my stop loss orders until after those bids get filled. Because like I said, sometimes I have to go back and adjust those bids based on market conditions, and I don't want to go and redo the work. But the problem with this, with doing it that way, is that I often, a lot of those bids get filled and price goes up, and I just, and I get lazy, and I'll be like, well, I'm just going to wait and see where it's going to go before I put these other orders in, and that can be a mistake. And so for 2025, I am committing myself to being more proactive about setting, really identifying all of my targets at the beginning before I ever open that order. And what I think is probably the most valuable part of that exercise is that it forces you to, number one, make those decisions, right? So your risk reward very well. And listen, when I do it, I do place I do look at my risk reward setup and where my potential stop loss is going to be before I place those orders. But now I'm actually setting that as I set the initial, as I open the initial order and wait for it to get filled. And what this does is it takes all of the emotion out of making those decisions when price is moving against you. It's never hard, right? I'm like, or let me rephrase that. It's always hard to watch price move against you. And it's also always hard when price is going up to go, should I really take profit here, or should I just let it go? And most often, most of us just let it go. And then ultimately what happens is maybe it does poke up past your initial target, and then retraces. And so by setting all of these stop losses and split TPs at the very, very beginning before I even open the order, my there is no emotion in that decision making. I'm not trying to make those decisions in the fire while I'm watching price. While I'm watching price go down, going, oh shit, should I sell it? Should I sell it here and save what I got left? Or, save, so or if I'm losing money, should I cut it now so I don't lose more? Because I'm pretty sure it's gonna go. Well, guess what? I was pretty sure that this dip was going to take us down to this trend line here at 91.6, and it didn't, right? So in that regard, I just saved myself because I almost cut it. But because I have my stop loss already in down below this level, then I'm good, right? I didn't sacrifice that trade. I didn't get shaken out. I'm still there. Now I had some alts that got blown up, but that's okay. That's part of the game. You don't have to win every trade, but you got to win most of them, and you got to have a risk reward in there that is going to be in your favor. If it's not in your favor, don't take the trade. Simple as that. So it was a little painful. I had I had a Doge position that that I had for a long time that was underwater, and then last week I DCA'd and I rescued it and I got it back to profit and I made a nice profit on it. And then Doge started pumping, as did everything. When we had what was that, up until January 6th, we had the certification of votes, which I think was a bit of a Trump pump, right? And so I placed another order to buy back in and do another swing trade on Doge, and it went against me, and I just I let it do its thing, and so I gave that one back. So you know what, you don't win them all, and I'm okay with that, because I like the setup that I had going in. Things changed. I was probably a little bit overzealous. That's another discipline thing that I'm working on is to be patient. And as soon as you close one trade, is not the time to reopen it. Let the market breathe for a minute. Take a beat. Look for really what the good entries are, instead of chasing price, and don't chase price. So that's pretty much one of my principles is not to chase price. And so now we're looking at a bit of a recovery here. Can price move back above the 21-day moving average? And then ultimately the 50-day moving average, to get back into this 100K range? Or is that going to be something that requires a nice catalyst, maybe from an unemployment rate on Friday, or potentially from something the new administration does? Maybe it's just an inauguration day thing, which is January 20th. Likewise, if price is pumping between now and then, January 20th might be a sell the news event as well. So we just have to away. And at the moment, we can see that we have ask liquidity stair stepping upward, kind of guiding the way as price moves up. These whales can't make huge orders at this level because of the thin liquidity overhead, but they'll just go ahead and grind right up as they are, and potentially bring it back up here to the 96K level. And just like we saw a rug pull down here, we could see a roof pull up here, just to keep things exciting for you. So I hope that gives you some insight and gives you some things to look at in terms of upside targets. We talked about this earlier in the week. Again, to the my conversation about where things end up here. I do still have a target up here above 120K. That's technically for me, it's 122.5K is where I have this measured move off of the cup and handle. But I do think that we could potentially go higher here this cycle, and a couple of targets come into focus for me, including each of these fib levels, and of course this lifetime trend line, which if you haven't seen that yet, I know this is redundant for a lot of you guys who've been following along, but this is really a historical trend that Bitcoin has not recovered back into in quite some time. So there's a chance that it never does climb back into this trend, but if it does, that really this, in my opinion, is the glass ceiling on price discovery. So if we can get back in there, then this becomes the glass ceiling on price discovery. And as you can see, that is a very, very big number um, over time. So we've hit the top of that channel a couple of times historically, but it has been, let's see, 2013 and 2017 and several years in between, and we haven't hit it. We haven't come close to it since. So now we're just trying to make it back in there. But that is indeed a possibility. And of course, there's lots of other targets, depending on who you follow or what kind of models you look after, you follow rather. There are some different targets out there. I'm not saying that mine is the definitive target, but these are um, these are predictable and reliable, measured, technical analysis based targets. Certainly, this is at 122.5. Certainly, the channel is, and certainly these fib extensions are. So, I think I saw something about a pi cycle top, which is something I'm really just learning about. But that was up here in the mid 200s range. Again, depending on a lot of factors, mostly I think related to the incoming administration and their policies, not just their crypto policies, but also their economic policies. Um, and their foreign policies, quite frankly, are going to have an impact on the market, and we're just going to have to see how things develop. And I think that some of the FUD that we're seeing across markets right now is related to that uncertainty about what this incoming administration is going to do. And we're seeing exactly the same thing in TradFi right now. Okay, right? All the indexes are down. So this to me is kind of predictable, and it is going to ultimately settle down. But this is a volatile period, and it's a time to look for opportunities. I mentioned yesterday that Doge was not my friend yesterday, and here's why: because it got flushed below my stop loss area here around this 21 moving average. Okay, and so looking for strength here. We did have some strength up here at this 35-cent level for a while, and that broke down. So now it's wondering if this 382 holds. Maybe the 21-day moving average does hold, but I'm not eager to rush back in. I'm willing to let things settle down a little bit before I take another entry on that one. With that, guys, I think I'm going to wrap it here for you. And we'll leave you with one last look at the order book. As you can see, price still moving upward. Let's zoom out a little bit and see if we have any changes in upside liquidity. Some of this, as you can see, has moved down, and that's what helped push price down. You can see these blocks of ask liquidity basically stair step down and push price down to get filled down here. And so now that that's done, we're trying to climb back up. Really not surprised to see the rug pull here, but honestly a bit surprised to see so many levels pulled. So what that tells me is we had one entity with a deep ladder here, right? That was covering all these levels because they all went at once. So this was one entity that was placing bids at 91.5. And down here, all the way down to the 89K level. So I guess they have conviction at this point that they're not going to get filled here because they took their order and got filled in this range down here. So likely this was also related to this entity here because that's when we saw this price start to move back up. So this is something I'll be watching through the rest of the day. If you're interested in fire charts or trend precognition or any of the other tools that I use, I've got links to them in the description. And with that, I'm going to leave it right there, guys. Hope you have a fantastic rest of the week. Listen, practice your patience, practice your discipline. These are literally muscles that need to be built. It takes years to develop that kind of discipline as a trader. And anybody that tells you it's easy and that you're going to be a millionaire in a year is not telling you the truth. So take a methodical approach, work on yourself, work on becoming a more disciplined and more patient trader. It's the key to longevity in this market. Have a good one. Have a good one, guys.